All right, good afternoon and welcome everyone. Today we have a special focus on a company that has built itself up to be one of the leading infrastructure and engineering innovators here in the Philippines, MWIDE Construction Corporation. Listed on the PSE since 2011, it has become one of the largest contractors for the private sector in the country and an active player in government partnerships following the development of the Mactan Cebu International Airport, the Parañaque Integrated Terminal Exchange, and most recently opened the Clark International Airport new passenger terminal building. Ongoing PPPs in their pipeline are the Malolos Clark Railway Project Package 1, the Metro Manila Subway Contract Package 104, and the modernization of Cebu's historic Carbon Market District. Today, the company will walk us through their first half 2022 performance to help update us on where MegaWide is currently at. After, they will walk us through the most recent development, which is the sale of its stake in the Mactan Cebu International Airport, and where the company looks to find its growth in the future. With us today are members of MegaWide's investor relations team with investor relations officers Christine Gonzaga, Rolly Bondoy, John Cosico, and the company's management team, Chief Business Development Officer Jim Feliciano, and later on, President and Chief Executive Officer Edgar Saavedra. Good afternoon, everyone. Oh, Mr.
Good
Saavedra
afternoon.
is already here. Thank you for joining us. Yeah, okay. So, but before we turn over the floor to you, we do know that a key update that happened in June, which was the dismissal of the case against the company for the alleged violations of the anti-dummy law for the Mactan Cebu International Airport. Well, this was a key risk that has loomed over the company, and we remember entertaining a lot of questions about this as we were listing CREIT. What we are happy to note is at that point, when we asked the company and when we looked at the merits of the case, we did see that there was a huge probability that it would be dismissed, and now it has been, and it clears a lot of headwinds for the company. Congratulations on that. We're very glad that that has been an obstacle that you have jumped over, and you are moving on to future business.
Yes, Gab. Case is finally dismissed.
Yes. You know, at that time, with all the looming headwinds, including that and the economic situation that we're going through right now, the price was trading around 317 per share. And I remember upon the release of the news, the share price started climbing up, and I think it went up to a high of 5.52 pesos. You know, now we're just around, I think, 380 or 360 pesos per share. And well, it's been quite a bumpy ride within the Philippine equity given the current market conditions globally. But right now, you had a deal that you did that you deal for the Mactan Cebu Airport. We're looking forward to what you have to say about the future of the company.
Yes.
All right, and
Okay.
then so okay, I think we can start with the first half earnings report so that we can get everybody up to speed. We turn over the floor to you.
Yeah. So see Christine, our IR officer, will just breeze through quickly our first half results because we want to focus on the big news, no, that everybody, of course, is aware of. All right, Christine?
All right. Thank you once again, Unicapital Securities, for hosting us in your 2022 webinar series. So this afternoon, we shall share with you the latest company developments covering the first half of the year. The highlights of our consolidated income statement and balance sheet are provided as annex to the presentation. Okay, so to begin with, let us start with our engineering, procurement, and construction segment. Following the reopening of the economy sometime in the third quarter of 2020, our construction business continued to build momentum. Since 4Q 2020, revenues from the segment averaged 3.5 to 3.7 billion, and in the first 6 months of 2022, reached 7 billion, at par with the same period last year, despite the onset of the Omicron variant in the earlier past of this year. And in terms of contribution, our construction activities provided 90% of revenues through our cast and construction solutions is steadily growing its share to 10% from less than 5% over the last 3 years. This performance is quite encouraging considering the high margin from this segment and its complement to our EPC business, especially in the horizontal infrastructure space.
Christy, I do have a
And
question before we move on to the next slide. So we're looking now at an EPC of 90%, and you've had the growing segment on construction solutions. Could you give us more light on how this is different from EPC and what our prospects could be in this side of the business?
all right.
Well,
Uh,
okay, go ahead.
June,
Go ahead.
Go ahead,
Go ahead,
boss.
boss.
Hello. Yes, I think what is your question again?
Yeah, so
Ah.
looking at construction solutions, growing to 10%, as mentioned by Christine, from 5%, and taking a bigger chunk of your revenue generation on the construction side. We'd like to find out a little bit more about construction solutions.
Yeah, because this construction solution, Gab, is basically what the business of MegaWide is not only limited to general construction. We also do supply like a precast, batching, ready-mix concrete to other contractors, especially for these foreign contractors who's doing the rail projects of the BBB. So all for those packages where MegaWide did not win as a general construction, but we are able to get doing business with the contractors by supplying some of the their ready mix, their equipment, and then the precast component. And we are seeing this construction solution business is growing also.
Just to add, Gab, si Mr. Saavedra is very much hands-on dyan kasi it's very kumbaga parang we are the only company that is fully end-to-end, di ba? Vertically integrated tayo. So he was mentioning we own our own equipment, we have our formworks, and then we have our batching plant may fix, and then we can also mobilize, no, depending on the scale of the project. So all these components support the EPC business, no? But it has been trending to get bigger and bigger. In fact, we recently expanded our precast capabilities recently.
Yeah.
Oo.
Especially, particularly, Gab, on those contractors who won, no? Kasi we did naman win all the packages. So we are also able to close contract and supply some of the components like the ready mix, the precast.
So in a way, when you say that, sir, when we look at construction solutions, it gets an exposure to the rest of the infra PPP projects that others have gotten awarded for. This business segment enables MegaWide to have exposure to that.
Yes. Meaning our client is also the contractors who are also our competitor during the bid.
All right, thank you for that. That's a very good future business segment that we're looking forward to.
Okay, moving forward, and in terms of our order book, we continue to work on a healthy order book of 56.3 billion as of June, equivalent to 3 to 4 years of revenue. 62% of the projects are in the first trimester of the construction life cycle, ranging from 0 to 20% accomplishment, while 37% are in the second trimester or 20 to 80% accomplishment. And the remaining 1% is in the project completion stage at 80 to 100% level. And private sector's projects continue to corner bulk of our pipeline with office, commercial, and industrial leading at 48% of the total. The residential sector accounted for 35%, while infrastructure and facilities, largely from MCRP, contributed the balance of 17%. And the infrastructure portion is expected to grow further with the addition of the Metro Manila subway and other big-ticket government projects in the pipeline. In terms of geography, Metro Manila remains a top location of our projects at 77%, but we are expanding our footprint as we move into the other areas in Luzon, which represents 15%, and the Visayas region at 8%. And moving on to the airport segment, we have seen the steady recovery of revenues in the first 6 months of 2022, registering a 178% improvement to 647 million from 233 million last year. Passenger service charges continued to provide the biggest source of revenue at 292 million, or a 45% share, followed by the commercial revenues at 276 million for a 42% share. The remaining 13% comes from aero-related revenues at 75 million. The strong performance was driven by the 349% growth in passenger volume to 2.11 million, comprised largely of 1.95 million domestic travelers and around 170,000 foreign visitors, with also a market upward trajectory since the start of the year. Air traffic likewise went up to 228% to 19,034 movements, dominated by local flights at 17,614 movements, and 1,420 movements from the international front. This also drove the increase in aero-related revenues in the 6-month period. The reopening of Terminal 2 also, which opened 3,800 square meters of previously closed commercial space, likewise boosted non-aero revenues as it more than doubled to 276 million during the period. And moving on to landport.
Oh, I do have one question.
Yes,
So
go
we're
ahead.
looking at the strong recovery already on the airport side of the business. I just want to get a sense, how are we compared to pre-pandemic levels? Are we nearly there? Are we still a little far? And where do we see the full recovery coming in from here where we stand right now?
In terms of passenger volume, previous slide, please. You'll see that it's still quite far from our 2019 year end was about 13 million passengers, no? Noticeably absent, of course, would be the international passengers. Historically, this comprised about 30% of the Mactan Cebu International Airport traffic, no? Right now, it's currently at 10%. Definitely, if we further dissect the components of the international travelers that frequent Cebu, these are Koreans, Japanese, and Chinese. So all of which they haven't really opened up their borders. No, it's just recently that Japan announced that they will allow travel, and South Korea hasn't really resumed previous COVID level, no. But having said that, I think what is quite unique with the situation is that the domestic traffic clearly showed some revenge travel, no?
Yes.
So we're very far. I'd say this is only on an annualized basis 4 million out of 13. So that's barely roughly about 30%, no? Although if you talk to the airlines, they're quite bullish about this, no? But then of course, throwing caution to the wind, we do know that there are changes in the business landscape that might result in higher operating costs and maybe sort of rationalizing flights as well. So definitely the vaccination rollout has helped boost the domestic travel, but we'll see as people sort of figure out this thing called inflation, higher interest rates, and and all these fancy business lingo, and apply it to their real lives, no? So we'll see. We're
You know, with
we're
regards to
hopeful.
international travel, there is a soft expectation that as COVID starts to turn over more, and given the current macroeconomic conditions, the Philippines starts to become a more attractive foreign destination, especially with the strength of the dollar for vacationers going here. So that's a good outlook, at least for international tourism. But
That's the
given,
silver
yeah,
lining,
that's
Gab.
a silver lining that we have right now. Given what I see right now, it looks like we've seen the pickup in domestic traffic pickup, and you know, sitting from where I am relative to how the stock price is doing, I could see more further recovery that we are seeing in the horizon right now as a potential upside going into the next few quarters. Okay, thank you.
All right, thank you. Moving on to landport. Okay, revenues from the office segment remained as the primary driver at almost 50% of the total, or 117 million. However, the office leasing segment continued to be affected by the high industry vacancy rate, especially in the Bay Area. Commercial revenues, on the other hand, posted its higher revenues in 2Q 2022 as passenger volumes also reached record high. Average daily count reached as high as 117,000 in May 2022 and already breached pre-pandemic levels. This also brought monthly commercial sales to record levels as of the first half of 2022, peaking at 83 million in May before ending at 77 million in June. And now, allow us to give you a brief summary of the share sale agreement signed with Aboitiz Infra Capital. The sellers were Megawide and GMR Airports International BV, or GAIBV, and the buyer is Aboitiz Infra Capital, or AIC. The target asset is GMR-Megawide Cebu Airport Corporation, or GMCAC, the concessionaire for Mactan Cebu International Airport. On September 2, 2022, the parties signed the share subscription and transfer agreement, the shareholders agreement, and the exchangeable notes form. This transaction involves AIC's purchase of secondary shares and subscription to primary shares of GMCAC for a total consideration of 9.5 billion and the issuance of 15.5 billion exchangeable notes to AIC from MCC and GAIBV. The first closing date will be 100 days from signing, subject to all approvals and completion of all conditions precedent, which can be any time from November to December 2022. And the second closing will be on October 30, 2024, when the exchangeable notes will be converted to GMCAC shares, representing the combined 66 and 2/3 plus 1 share of Megawide and GAIBV. So based on the steps, the following shareholdings will be reflected. From the current Megawide and GAIBV ownership of 60% and 40% of GMCAC respectively, this will be reduced to 33 and 1/3% plus 1 share for Megawide and 33 and 1/3% for GAIBV, and AIC will own 33 and 1/3% minus 1 share on the first closing. And upon the conversion of exchangeable notes on October 30, 2024, AIC will have 100% ownership of GMCAC. And for Megawide, the transaction accelerates capital recycling and enable us to crystallize the value of the asset, which we believe is not being reflected in the share price. The term of the transaction has an implied valuation of an EV to EBITDA of approximately 20 times based on 2019 EBITDA of the airport, and compared with the regional average of around 17.7 times. This allows us to upfront the value from our investment in GMCAC at an attractive level. And moreover, it will enable us to re-engineer our portfolio into more cycle-resilient, scalable, and high-growth segments. For one, it allows us to accelerate our infrastructure developments, which includes our foray into rail transport, such as the MCRP and the recently awarded Metro Manila Subway project, as well as our social infrastructure, especially in the affordable housing space and urban renewal through public market modernization. I think we have one question. We
Oh,
will
sorry.
also have
Yeah, I just wa- I got stuck on the previous slide. If we could discuss it just rather quickly. Um, can we go back to the previous slide, please? Thank you. I noticed that what you used was a 2019 EV EBITDA figure. And from our end, wow, quite an achievement given that you did price it at the time before the pandemic happened. Maybe you could walk us through a little bit on how the implied valuation went through, given that given this thing that we've noticed. And at 20 times, it comes out as a premium to the 17.7 times average. We'd like to know a little bit more on how this was priced during the sale.
Well, definitely it's not a fire sale, no.
Yes.
I think to be fair, when you look at or evaluate the airport business, all things considered, it is a very profitable business, no. It's just external environment sort of dampened the business segments. Um, in terms of valuation, Rolly, you want to give a little bit more color on that?
Yeah. Can I say something, Joe?
Yes, boss. Yes, boss. Of
Okay.
course. Yes.
Yeah. Well, actually, if you run the traffic projections we hired a where we hired a third party sino nga yun, Joe? Yung the one who is doing our traffic analysis, si Ayata. Is that Ayat? Huh?
Mont McDonald.
Mott
No,
McDonald,
the other one.
boss.
Small McDonald's and the other one.
Ayata is
Uh,
the industry kumbaga
No,
parang the
yeah.
industry expert on traffic.
Yes.
Yeah. So
Yeah, we did hire
we
someone, I
hired
remember.
we appointed a third party, neutral, to make our traffic forecast projections, and then based on the traffic projections, we did the DCF. So more or less, the number came out to be that number. So it's fair for both parties.
Right.
Yeah, that's correct, Gab. I think when you think about it, syempre there's a little bit of premium because it's a scarce asset. No, this is the only airport that has 13 million passengers. No,
Yes.
of course, NAIA is a different story altogether. But I think the buyer understood the scarcity of such asset and was willing to pay a little or recognizing that premium. But for all intents and purposes, we believe it is a fair valuation for all parties involved.
Yes, yes. When you look at this, especially since I noticed the 2019 figure, I think yes, we do go away from the idea of a fire sale. Some
Yes.
investors are thinking the airport business is still a laggard in terms of economic recovery, even if it's showing some promise. But at this point where we see this implied valuation, it wasn't sold at a discount as to how some investors would think right now it was sold at. As we see here in the numbers, 20 times, it's still above the average of 17.7 times within the region.
I
Siguro
would say
just
it's a
to
fair price, Gab.
yes. Boss,
Yes.
maybe you can share that this isn't actually the first party that we've
Mhm.
explored, no? I mean,
Yeah.
there were
Yeah.
other
Meaning, yeah.
parties.
To be honest, no, Gab, we were approached many investors. Even if before a pandemic, even during pandemic. So as you know, a lot of the big players now in Philippines who really wants to go into infrastructure, want to go into airport business. However, most of them, no, almost all of them, they don't have the capability. Unlike in Mactan, we have, the size of Mactan, the asset is sizable, meaning if you have that team, no, that capability, you can practically also expand your other airport business, not limited to NAIA, no, even the other provincial airports.
Yes. Yes. One follow-up question to that. So you did have some investors to choose from. I'm quite interested to know how the selection into Aboitiz Infra came to be, and into that closing. How did that go?
Okay. No, one of the criteria, we want to make sure also, Gab, that the buyer will be somehow at least relevant, meaning we want to make sure also the Cebuanos will also like to the new operator. We know that the buyer is also a local. They're also from the same town. They came from the same town, and then they have the same culture, and the ethics, so for us, it's also equally important. So we have to be very sensitive on that because we know that airport is really a public asset, right? And it's, the Cebuanos also are very, very sensitive on this.
Understood. So it's a matter of passing it into capable hands and at quite a good valuation. Okay, thank you.
Yes,
Thank
capable
you.
and relevant and local.
Thank you. Thank you.
All right. So going back,
Just
we will also have a bigger war chest to pursue the expansion of our transport-centric portfolio, where we target to develop 10 locations within 3 to 5 years, with PTEX at the center. Currently, we have identified 4, 3 in Luzon and 1 in Cebu within the carbon market redevelopment. Second, it will allow us to venture into digital infrastructure as we currently finalize negotiations with a strategic partner. We shall disclose more details on this area as these become available, but we strongly believe this is an emerging growth segment in the next 2 to 3 years. And it will also allow us to manage our risk profile as we prepare for the impact of rising fuel prices and a global economic slowdown, if not a recession in the coming years. And lastly, it will enable us to strengthen our profitability as we deconsolidate the airport in our P&L and book only the 33 and 1/3% share as equity earnings. It also helps reduce our consolidated debt to equity ratio as we deconsolidate the 27 billion project financing incurred at the GMCAC level, bringing our consolidated DE ratio to 1.5 times from 2.6 times previously and reducing our total bank debts to half.
So I do want to ask a question here as we go through this acceleration. So you do get a cash windfall now, and from our end, given the high interest rate environment, it's a good war chest to work with without any interest rate expense. Moving into the next 2 years, where do you feel that you will be putting the windfall in terms of capex spending and somewhat allocations? And I guess of the 4 that you've mentioned to accelerate, where do you see the, I would say, fastest ROI growth in terms of being able to start up, build, and mature among these businesses?
Okay. Yeah. Right now, Gab, in the pipeline, we have like a couple of transportation business in the pipeline.
Yes, sir.
And then we're also looking expanding the public market also. That's just another side. So, and of course, also for construction, we will keep on focusing on the BBB, which is
Right.
the rail projects and the other bridges where we think it's more resilient to focus on the infrastructure, given that the macroeconomics is a little bit gloomy in the next coming years. So we want to be more prudent, no, in getting what business, what sector.
Sir, I
And
do have
I
a
think,
follow. Oh, go ahead. Go ahead, Miss.
yeah, if you'll notice, Gab, I think what we are accelerating are businesses that we already have proof of concept. So I think that's what gives a certain level of confidence as far as execution, as far as implementation is concerned, because obviously our strength of having engineering and procurement and construction in our DNA enables us to build all these different infrastructure projects, no, whether it's rail, subway, and then those that are sort of transportation related, like our land ports, rolling out the land ports, as well as social infrastructure in terms of the carbon market redevelopment, and leapfrogging basically into a digital infrastructure business segment. So I think that's one of the key enablers. Our construction expertise allows us to dabble into new business segments that are um kumbaga expandable in varying
Mm.
shapes and sizes depending on the local government appetite or the availability of land, no? So it gives us that room to grow, and at the same time the track record is sort of established. So it's
Mhm.
not really something that we're, rolling out with no experience yet, no? It's not a
Yes.
shotgun approach, basically.
Yes.
Gab,
Yes, sir.
but Gab, the other reason also, no, we want to strengthen our balance sheet given that
Mm.
the upcoming situation on the macroeconomics. We want to definitely, by doing this transaction, our balance sheet will come up to be much stronger. Number two, we also need to calibrate our liabilities, our loans. So
Mm.
obviously, we will allocate a portion of the proceeds to pare down our debt. This is to manage our liabilities. This can also improve our interest expense, our interest costs. So all of this I just mentioned is part of the business strategy of the company. Um, like to sum it up, one is we will focus on the more pandemic resilient business sector. Number two, it will strengthen our balance sheet. Number three, we will also manage our liabilities.
That's very good to hear. I mean, the side on liabilities, going into a rising interest rate environment, we're starting to see interest rates reach their peak next year, and you're going into big
Yes,
ticket infra items, infra projects coming into this next year. That helps you not have to resort to as much leverage as you would have need
yes,
to, which also
yes.
gives you a good war chest to approach it without having to get the loans at the I would say exorbitantly high rates we expect next year.
Correct, correct. Yes, you're right.
So I guess on our end, that's a very good development to look at. The sale of this airport. If we look on our end, we were quite puzzled at the start, but now it's becoming more clear that the sale of the airport did crystallize a value of the good windfall already for the next 2 years, and it also in a way does not lead you to excessively have to tap the debt markets at a very unfavorable time.
Yeah, because remember, Gab, for the last 2 years, because of the pandemic, airport was really not, doing so well. Now we also need to top up. This is also dragging our bottom line figures for the last 2 years. So, well, it was only recently that the airport has been or starting to go back to normal, but it's really not yet as it used to be.
Mm.
So that's why we need to make that decision because we think in terms of know-how, the knowledge, the management know-how is still there. Now, if ever we really want to go back to whatever opportunity of the airport, I mean, it depends. We can come back and reinvest, right?
Right. But one thing I also want to note for everybody watching right now, one thing that to note, there will be two transactions to the sale. The company fully unwinds it in 2024. So between today until then, there is still exposure to that recovery in the in the airport business and the resumption of economic activity and tourism in terms of that. So um, it's a good pivot. You start right now with an agreement in the next 2 years. You still have a good exposure to that recovery, and by that time, you get to focus on new business.
Yeah, yeah. Anyway, we have plenty in our pipeline right now, so it's a matter of like shifting the focus to a different business, right? You capitalize or you monetize one of your asset, and then you focus on the other sector where you think it's more pandemic resilient, right?
Yes. Sir, I do have one question, and I think this was one of the questions I was trying to ask earlier on. So now that you're pivoting your business, spinning off the airport business, and you have certain contracts right now, and you have your views of how and where you will focus the business on. Um, this is not a speculative question, but given on what you already have right now and where you see what you see in the horizon, especially we're going into infra, which has a gestation period, when do you expect, from as far as you can see right now, most of this value to be realized for MegaWide? When will this peak, so to speak?
Okay. Um, we have plans also. Gabno, the company have plans to also focus on other sectors like potentially, we can go into like affordable housing, like doing a forward integration. Now, we also exploring also some M&A where we can acquire some existing operating business where it can at least replace acquired existing and also develop new ones that eventually can replace the airport business in terms of the cash flow.
Ah,
Because ultimately the question is, okay, if you don't have the one of your crown jewel asset,
mm,
now how can you use this fund war chest to replace a new business, one or multiple business. So
mm.
obviously the strategy is we are very confident that in the near future, like less than 3 years, that we can able to transform or get assets that can generate cash flow equally or even more than the airport that we have.
Oh, that's very good to hear. That's very good to hear. At first, when this deal happened and we looked at at our forecasts, we were wondering how the cash flows would do. But knowing about this is a good comfort to investors in understanding that the management team is not just focused on the future big ticket items where there's a longer growth of the station, but of course, cash flows and maintaining cash flows is also a very important concern. Thank you, sir.
Yes, and definitely we'll get a focus on the business where you have more cash flow, right? That can generate cash even on during pandemic.
Yes.
Because in the case of airport, we know for us to really go back to normal, I think it will take also about 2 or 3 years, right?
Yes, yes. All right. Thank you for answering that question. I'm sorry, Christina. We can continue.
Okay.
Yep, actually, that ends our short presentation, and we'll be
Oh,
happy to entertain more questions. Thank you.
okay. Well, okay. Thank you, everyone, for that presentation. On top of my questions, I understand some of our clients who are on the call do have some questions to ask. If I may, let's start with one question that we have here. So, whenever you partner with with the government for a project, how do you protect yourself from possible issues such as corruption and mishandling of the government's money? Also, how do you address the slow or late payments of the government?
Okay, Joe, baka we can ask Jim to answer that.
Ah,
Yes, I was gonna.
Jim? Hi, good afternoon. Good
good
afternoon,
afternoon, Mr.
everyone.
Feliciano.
Hi. So I guess to answer that question, we look at it from two fronts. Well, obviously, the first one is you have to make sure that you're protected in the contract, right? That's fairly obvious. No? So when you negotiate with the government, you have to make sure that there are certain clauses there that adequately protect your interests as a company, especially since it's a long-term contract, right? Typical PPP projects, they're like 25 years, 35 years. So administrations will change, right? Policies will change, obviously. So you need to make sure that you're sufficiently protected in that scenario. However, given that it's the Philippines, right? It's
Mm,
not always just about contracts. Sometimes it's also about how you engage with your stakeholders. No, I don't think that based on our culture, we can always rely on contracts. You have to make sure that you're flexible enough, such that you remain to be a partner of the government in the long term. So there may be certain things no that you have to do to be able to accommodate the government. I'll give you a concrete example. No, so during the pandemic, right? The government, DOTR said, can we use PITX for the OFWs? So that it'll be the official drop-off point, right? Before they're sent to the provinces. Now that request, entailed additional costs for us. It's not required in the contract, right? So
Right.
technically, if you just look at the contract, we can say, oh, we don't have any obligation to accommodate the OFWs, right?
Mm.
But then again, if we do that, then we're not, a real partner of the government. And at that time, it was an important a move on the part of the government. No? So accommodating that request made sure that parang we maintain a very good relationship with the government, with the people who are in that particular administration. No? So that's just an example. Meaning you have to make sure that you're a real government partner. You support their plans and programs, regardless of what the contract says. No? Because this is the Philippines. It's a different environment.
The bottom line, Gabi, we've
Hmm.
been doing PPP, and I think we have garnered more than 6, 7 PPP projects. We should be expert already on this. It's about stakeholder management, understanding the contracts, and understanding the business.
Yes, yes. I was about to mention that also as an addition, having the track record already, and there were challenges that came along the way. There was that nuisance case that we were looking at, but still the
Yes.
company is unable to maintain its honesty and its good track record with the government. And now that you're engaged in more with the experience that you do have, this is quite I wouldn't say a walk in the park, but I would say that the company is quite competent at doing these things.
Yeah. Otherwise, Gabi, they could have done something worse, right? But you can see that the airport they cannot even touch because the concession agreement was very strong. The contract, so they cannot do anything. So we're also very careful in dealing with dealing with government. We are careful in crafting the concession agreement, the contracts, because we also don't want. We are not the type that deals with government and doing a midnight deal, a sweetheart deal.
Yes,
But
yes.
maybe just to add also to what Ed said, no, it's also because we do a good job in delivering projects.
Yes,
Because if
also.
we don't do a
Yes.
good job, then we can easily be booted out.
Yes,
Diba?
yes.
But we have the support. Like for example, the Cebuanos, they're very happy with their airport. Right?
Yes.
So all of them were saying, oh, you can't remove MegaWide GMR
Yes.
because they've done a good.
We are being loved, Jim, and embraced by the locals.
Exactly my point.
That's also very critical.
So as we understand now, doing business with the government is both a business deal and a good relationship.
Yes.
All right. Moving on to another question that we have here. I think I'll bulk it together. We did discuss this a little bit with my questions, but maybe we can just revisit it for the investors' clarity. So if we were to just if we were to categorize it and look at it in order, what are the next strategic projects for MegaWide? And with a specific question on the construction solutions business, within 5 years, how do you expect the growth rate to be for that side of the business?
Okay. Well, the construction solution right now it's having like 10% share. We expect that to increase to up to 40% in the next 5 years to 50%, probably 40% in the construction business. Now, other than that, as I mentioned earlier, now by the way, I forgot to mention we're also looking at the data center. Now, hopefully, if we can close that, that's one of the new business sector that we want to get into because that's also pandemic resilient. And we hope also we can do some transport business, whether be it a terminal side or a conveyance, like a BRT system. So, and also we also are looking at expanding also some public markets on other cities.
Hmm. I think this goes back to what Ms. Cosico earlier mentioned. You are looking to expand businesses that you already have established a proof of concept in.
Yes. By the way, Gab, I forgot to mention, no.
Yeah.
We are still waiting for the government directions. We know the government has been openly or publicly announcing that they are going for a PPP modality, no, in terms
Mm.
of um, rolling out the projects. So we are still very interested and optimistic on this. So hopefully, if they can finally decide by this year or early next year, that can be a potential opportunity where we can participate. Basically, it will be from infrastructure, right?
Yes, yes.
So those will be those projects will also be additional to our pipeline because we will actively be participating.
Okay. We're happy to know that you will be part of building the Philippines infrastructure future, and you have
Yes, and
already
and
been.
yes, and I think when we participate, no one can tell us that we don't have the funds anymore, right? Because we're being always bullied by the big boys, right? That we're
Yes.
small, we don't have the financial capability, all of this, right? So
Yes.
so now I don't think anyone can say that we don't have the financial capability.
Yes, yes. Okay, you know what? Since you're mentioning that, sir, one question that we have quite connected to that, a little bit connected to that. Can you walk us through the rationale of doing it in two tranches over the next 2 years instead of doing it in one tranche?
Oh, basically because we have to comply the concession agreement wherein there is a lockup period. So that's the reason why we have to do that.
Ah, okay. So
That's the
it's
only reason.
yeah, okay,
So we need to
understood.
comply we have to comply the concession agreement. So we need to have the two steps.
Yes, yes. It's more of a cleanup process for being able to transfer it to the new owners.
And
Yeah,
also
based on
the
the concession agreement.
Okay,
yeah.
okay.
There's also that consideration for having a smooth transition period, no?
Yes,
So
also.
it also allows us to have a seamless turnover and basically say maintain or if not better the existing service levels. Ganyan. So it's also that.
Okay. I have a question here, and I think this aims to understand how you guys would plan to manage future business. Does MegaWide plan to keep the projects upon completion, or is it possible that some of these projects could be sold to third parties after a few years, similar to the airport?
Boss, you take that.
Ay, can you say it again? Ano? Sorry.
Okay, sorry. Does MegaWide plan to keep the projects upon completion, or is it possible that some of these projects could be sold to third parties after a few years, similar to the airport?
Which one? Which one is this? Which one
The
are you
new
referring,
projects,
Gab?
The
boss.
new projects.
The new projects po.
I didn't get it. Can you explain, Joe?
But Gab is asking for our new expansion businesses like the land ports and
Yes.
the data center.
Yes.
Are we considering keeping the assets, or this would also be at some point sold off
Oh.
once it reaches maturity?
Well, that one it will. Well, it's not a general. I cannot give a general answer
Hmm.
because every asset will have different peculiarity. Will have its own peculiarity. So you have to look at it from the strategic point of view. Meaning, every asset you have to look at the like what will be your company's direction, right? What would be the macroeconomics? What will be your appetite in terms of directions of the what will be the risk? So all of this has to be factored in and also the price, right? So it's I cannot just say like okay that's the business model. We do the projects, develop the project, and then flip it afterwards. It doesn't work that way because it depends on the business strategy, right? So the organization kasi can evolve and it can evolve depending on the maturity of the people, depending on the circumstances of the environment, the macroeconomics. So a lot of factors. It's a strategic decision.
Yes, I
Yeah.
agree. You know, on our side, when we look at the sale of this airport, we don't think it was a build and flip situation. If
Yeah, it's not it.
yeah, if we look at the current macroeconomics and as presented earlier, we're around what 30% worth of recovery in terms of travel with the Cebu Mactan Airport. You know, the sale at 20B is very strategic for the company because that's around what 5 or 6 years worth of cash flows, which will come into the company already. And from here, they're able to develop the other sides of the business and strengthen those other ones. So for our on our end, you know, when we saw how the Cebu Mactan Airport was being operated, it was being operated well. We did understand that the company did intend to keep it, but you know, the world economics have changed. We've had some
Exactly.
unforeseen events, and at this point, it's quite a good pivot to already realize the value of the airport to be able to pursue future projects.
Exactly. Think of this, Gabi. If you look at the funds that we will be getting
Mm.
now you have two options, no? If you keep the asset, you know it. You will start get going back to normal in the what year 3, year 4, year 5, right? If we're lucky, year 3, year 4. If you're not, probably year 5, year 6. So my point now, if you get the funds now, the question is, can we use the funds and then convert it to bigger value in the next
Mm.
5 years? The answer is sure. The answer is yes. So then it
Mhm.
makes sense, right? From the
Mm.
financial point of view. Now, second, from the macro and strategic point of view. Now, after the pandemic, um, would you focus your strategic business in a pandemic resilient business? The answer also yes. Now,
Ah, yeah.
is airport is a pandemic resilient? The answer is no. So that's why it's a strategic decision. So if we can use the fund, that 25, that 15 billion, and then convert it and create a bigger value assets in the next 5 years, then it makes sense to divest, right? And
Mm.
focus on that direction and the new business where it is pandemic resilient.
Yes. Understood. Looking at it, it is a good pivot into exiting something that has been quite affected by the pandemic and moving on to something that would be more pandemic resilient. Should hopefully not it happens again.
Yeah. That's why we don't know it. It's just, I mean, the world is getting complicated. You have now pandemic. You have now the Russian-Ukraine war, and then I think you have to be also very adaptive and yeah, you have to be very adaptive and agile also, right?
Yeah. And you, in a way, that adaptability that you're talking about, we're seeing here, as we kind of mentioned earlier. So you did already have a business that suffered through the pandemic, which was downturn one, and now the future outlook on interest rates, which is going to be higher, in
Yes.
light of the new government contracts, PPPs that will be debt heavy to execute. This is the adaptability that you're saying that now these funds do go into those projects and at a less interest expense rate, so that helps you mitigate the current risks right now of interest rates and execution risk with all the things that are going on right now in the global economy.
Yes.
Okay, I think that's it for the questions that our investors have. um Before we conclude, please let me leave like a quick note for everybody. And Mr. Savred, if you may, could maybe leave a quick note for our investors here on the call. On our side, we see this transaction to be value accretive for the company, having seen the crystallization of the value and being able to weather a lot of the risks moving forward with regards to global macroeconomics. We like the fact that it's a very big business to go into PPP, and we already know that the company has a good track record, and even when it was challenged, it maintained a good track record as well. In the near term, I think management has helped us understand where short-term cash flows could come from. Not short-term, more on the medium-term cash flows could come from, while The bigger projects are still going through the gestation period. And on the next 3 to 5 years time, we do see the business to be growing both on the asset side and on the revenue side, to be much bigger than where the current balance sheet is, driven by these new outlooks that the company is looking at. And before I just finish that, when we say new outlooks, it's putting their existing competencies already with construction and the relationships with the government and doing PPPs into just new projects. This is not a type of pivot where the company is going into something basically experimental. All right.
Well said, Gab. Thank you.
Thank you.
Maybe we'll ask our chairman and CEO to give a sort of a parting words for the investors.
Okay. Yeah. Yeah. To all investors. So what I can say, we know that this transaction that we just have done now, I think what we can assure to the investors is that the decision we have made is based on the strategy that we think will be more superior, because this will put the company in a stronger balance sheet and stronger financial capability, where we think that for the next upcoming opportunities, for the PPP, we are very much prepared. Plus, on top of the current pipeline projects that we have. So obviously, the money that we'll be getting, the proceeds, will definitely be reinvested in a business where we think can generate a better return. And we think one more, no. And I would also like to tell to the investors that we have a strong management team, wherein we have a competent management team who can do PPP projects. We are confident also that we can compete with the other big companies in the Philippines and deliver good service. And I'm very confident on that. That's why we're just waiting for and we know naman Philippines has plenty of opportunities, plenty of infrastructure to be built. That's why we made this decision. We made this transaction.
All right.
Okay. Thank you.
Thank you, everyone. Thank you, Ms. Cosico, Mr. Saavedra, Ms. Gonzaga, Mr. Bondoy, and Mr. Feliciano for your time. Thank you very much for helping illuminate us on the future direction of the company. To all our
Thanks,
clients,
Gab,
thank you.
for having
Thank
us.
you, Gabi.
Thank
Thank you.
Thank you. To all our
Thank you.
clients,
Thank
I
you.
hope it has helped everybody have a good insight on the future prospects of the company. And from where we stand, we see a bright future for MWIDE and its future business. Thank you, everyone. Okay, have a
Okay,
good
thank you.
weekend,
Thank you.
everybody.
Thank you.
Have a good
Thank you.
weekend.
Bye.
Thank you. Bye-bye.